What's good, everybody? It's Jonah come back at you another video. So this video I wanted to do a trade recap for the S&P 500 for Friday, April 25th. Now, I wanted to record the video shortly after the trading session, right? Because I took a trade, it resulted in a win. Great. The only problem was that I was sick, right? The past couple of days, I've been recovering from probably a cold, most likely, right? It seemed like pretty standard. So that's why I'm recording it now. I just wrapped up today's trading session of Monday, April 28th. Nothing happened today, right? Technically, right, my trading hours are from 9:30 a.m. to 11, but price didn't give me what I was looking for, so I stepped away, and now I'm recording this video for you all. So on Friday, April 25th, there was no news, right? This was pretty much almost like a no news week. Um, and so Monday through Thursday, I was behind the charts the entire week. Monday to Thursday, there were no setups, and surprisingly, at least 2 out of these 4 days, or at least 2 days out of the week, I should say, pretty much like 5 minutes after the 9:30 open for the stock market open is when I closed my trading view and my broker because price wasn't giving me what I was looking for, right? So there's gonna be some trading days like that, especially maybe on these like quieter weeks that, sometimes price may just go in the direction you anticipate and not give you the manipulation. And in those cases, you just have to walk away, right? And me personally, I was not necessarily expecting a trade on Friday because I feel like Fridays, you know, don't really tend to deliver as many setups. Um, but it did deliver a setup and we took it and it worked out. So just gonna give you guys the breakdown for that. So there was no news on Friday, so nothing for us to really be worried about. Um, and so now jumping right in. So the way I look for my bias now, previously I would only stick with the daily bias, like just using the daily time frame, but I've learned that it's better to keep going down the time frames to get an idea as far as order flow, as far as directional bias, see which direction price is currently trending, because once you figure out the direction that price is moving, your goal then as a trader is to simply trade in that same direction that price is already moving, right? Because if you were to think of price as being a river that's flowing, right, you want to flow with the river, not against it, right? And most traders struggle with profitability because they either struggle with finding direction or they just don't know how to do it. And so they're sort of like trading blindly without trading with wherever the orders, like wherever order flow is, right? So, um, basically, I begin from daily time frame and I work my way down. So I didn't really place much emphasis on the daily time frame because it is pretty ambiguous in the sense that like here we have a fair value gap. This fair value gap got blasted through. Here we have another fair value gap that appears to be temporarily getting respected, but then price is going up and it's closing above this level. So it's sort of giving mixed signals as far as where it wants to go. Even though the daily, you can make the case for it going either direction. So that's why I didn't really look at the daily. Now for the 4 hour, right? At least for the 4 hour, it seems like price is bullish generally, right? Because you can see here, this is a big fair value gap that price clearly respects and then continues trending higher. So, most will immediately just think, oh, price is bullish. But I kept just jumping down lower time frames to see if I can get a feel for where price is going. Now, here on the 1 hour time frame, this is where I got a better idea as far as, what was happening because um here I'm looking at the 1 hour and most people probably not won't go into much detail because they're like, okay, well, it seems bullish on the 4 hours, so we'll just stick with bullish. But I settled on a bearish bias, at least for that trading day, for a few reasons. First and foremost, right on the 1 hour, I noticed that this low right here, right, this low right here gets cleared. It gets broken under, right? So clear as day, price is trending up and up and up, and then price right here breaks this low, and this candle up here came up and cleared this high right here. So buy side liquidity was cleared, and then price breaks down lower. Not only that, right? You're also seeing this gap right here. this fair value gap that initially price respected, right? Because that's what we want to see when price is bullish. We want to see bullish or fair value gaps get respected. So price came up, went down, respected fair value gap, made a push up again, and then price completely blasted right through and obliterated this fair value gap. So these are already signs of bearishness. Now from here, I wanted to drop down to a lower time frame, for 15-minute time frame, to see if there was anything else that I was seeing. And this is where I, you know, got more information and settled on my bearish bias. So price came up, of course, cleared this high here with this push up, and then eventually this low that I highlighted right here gets cleared with this wick right here. Price trades through it. So then that would technically be sort of like a bearish push. But in case you were, on the fence about it, this candle came down and closed on the right. You see an aggressive push down. Now, two other signs that made me settle on bearish order flow. First and foremost, right here, right, as you can see, price came into this fair value gap and absolutely respected it and just rejected off of the fair value gap, right? So that's one sign of order flow, at least for the time being, temporarily going bearish, right? You see the gap is obviously getting respected, and these gaps, these bullish gaps that formed right here, you can see price is literally closing through it and just blasting right through. So it's not respecting bearish order flow. I mean, sorry, bullish order flow, right? Is not being respected, and bearish is in the form of this fair value gap. Now, price did leave us another hint of wanting to be bearish, and it's with this long wick right here. So this long wick came up, and what did it do? It essentially cleared this high right here, right? Price came up and cleared the liquidity that was resting above sort of like all these candles right here, right? This wick came and cleared all that. And another sign of at least bearishness is that it's not uncommon for price to go up and wick previous highs. Why? Because a wick is essentially price moving rapidly up and down. Um, And so price didn't want to actually close above it. Why? Because price didn't actually want to go up. Price just went up and wicked this high and just kept going lower. So that told me that that was essentially like a liquidity grab, like essentially like a purge, um, before going lower. So these are all signs of price being bearish, right? The break of structure, the fair value gap being respected, the liquidity grab here. So I'm already seeing price from a bearish lens. Now, if you wanted to drop down even lower, like on the 5 minute, for example, right? You're also seeing right here on the 5 minute time frame that this fair value gap is also being respected, right? Price is going up and the bodies are respecting the gap, right? The bodies do not want to push higher, right? And it's just wicking, wicking, wicking. So because of that, because of all these reasons, this is why I settled on a bearish bias for the day. So for Friday, April 25th, I was only looking to take sales, right? Because price, at least from this trading day onward, from this vertical line down, it's just been bearish order flow. And once again, you want to be successful with trading, you want to trade in alignment with the direction that price is heading. And right now, price is traveling bearish. So you want to take you want to only look to take sells, right? You don't want to try to take a buy when price is, at least in this moment, going bearish, right? Because then you're going against the overall direction. So that's how I settle on bearish buys. Now, few things to be aware of. So I'm looking at that. Of course, we just highlighted that this fair value gap got respected. Now, the other thing that I noticed that was key was this massive wick here. So what you guys need to understand about massive wicks like this is there is oftentimes these wicks get respected as like support and resistance, and I put in quotations so you guys can understand what I'm trying to say. Like for example, because we're bearish in price, a wick like this, I'll just so because we are bearish, um, okay, so because we are bearish in price, it is a tendency for price to respect these long wicks as essentially resistance, like to treat them as resistance. And so when I was marking up my charts, I also marked this wick like this because the 50% mark from the end of the wick to the beginning of the wick, right? The 50% mark line, which is this red line right here, that's called consequent encroachment. So it is, you know, a behavior of price to go and respect that 50% mark. So that's what I had marked up on both like the NAS and the S&P, right? So that's why I was bearish, and this is essentially what I had. So now jumping into the day, right? So it's kind of right here. This is the 9 o'clock candle. So what I'm looking for, essentially, I'm trying to look for the last swing high prior to 8:30, which we have 8:30. The vertical line for 8:30 is right here. We look to the left. This is the last swing high, right? So this is my buy side liquidity that I marked up, and then at least for the time being, right? This would be the final target, because if we're bearish on price, right, we want price to at least clear the low of the day. We would expect that, right? So this is the setup that I'm looking for, right? Before this setup plays out, I would want to see price push up, of course, clear this buy side liquidity, ideally tap into this consequent encroachment right here, which would serve essentially as quote unquote resistance, and then drop lower, and then we take price for a sell, um, lower. So that's literally how I had it all marked up. So now we'll just let price play out. So 925, 930, boom. So this is the 930 open. Now, remember guys, I want to see liquidity get taken, which clear as day did, right? So I'll mark it up with the eyeball. Boom, right? Now, the next thing when liquidity gets taken, I stay on the 5 minute time frame, right? Because I want to see a large aggressive bearish candle lower, right? Because if I'm expecting price to be bearish, I want to see a break of structure lower, but I also want to see that same aggression and momentum that price actually wants to move lower, right? I don't want to see no anemic move, right? So here, as you can see, at the 9:30 open, what actually closed was a bullish candle. Now, I seen some traders, if I dropped onto the 1 minute time frame, I seen some traders. Well, this happened on the NAS, but essentially on the NAS, price came up, clear liquidity, and then broke structure. And I seen traders take a sell on the NAS, which ultimately resulted in a loss. Why? Because some traders seen this as like a break of structure, and I'll show you guys on the NAS, right? Eventually, right, later in this video. Um, this looks like a break of structure. So some traders seen a break of structure and then traded a sell for the gap and then lost the trade. But that's because price did not deliver the momentum on the 5 minute time frame to want to go lower, right? Price right now is still showing signs of bullishness. So that's why there's nothing for us to do, right? So you can see price came up, it started going closer to the 50% mark for consequent encroachment. It didn't yet, but price came up and then essentially uh, rejected. So this is the type of momentum we want to see. We want to see an aggressive push lower with this candle. So from here, right, this is obviously a great sign. Now I want to start dropping into a lower time frame, 4 minute, 3 minute, 2 minute, to see any break of structure and like any fair value gaps. So right now, at least on a 5 minute time frame, this swing low would have to be broken um, to be a structure break. 4 minute time frame, obviously we eventually see price come down and break structure right here. It broke this low. So I can just mark that for you guys with the highlighter, right? Boom, right there. This low clears day gets broken, and we see a fair value gap um, get formed. So this is a great sign right here on the 4 minute time frame. Nothing yet on the 3 minute time frame. 2 minute, nothing, right? Nothing yet on the 1 minute. So it's still that low that needs to get broken. So the reason why this candle printed is just because for some reason the 4 minute is ahead, right? So we skip to the next candle, right? We see another aggressive push here on the 5 minute. So on the 5 minute time frame, structure gets broken here. Now we keep dropping down lower in the lower time frames. Same idea here on the 4 minute time frame. Another gap was left down here. 3 minute time frame, we're seeing this low get cleared on the 3 minute time frame, and then we see a gap up here. So right? This fair value gap. Why does this fair value gap fit all of our confirmations? Well, because from the displacement low, which is this low right here, to displacement high, which is the last high, we drag it on the feature, right? And we highlight it pink. We want the fair value gap to form within this range from this low to this high. And clear as day, we see a fair value gap that formed, right? It was formed by 3 black candles, which is what we want to see. We want to see momentum in the direction we want to head towards, right? I'll go on the 2 minute time frame. Um, you see the fair value gap form as well, but of course it got formed with the bullish candle, so we wouldn't be paying attention to this time frame really. We would be looking at the 3 minute and also the 4 minute. Now, the reason why I was comfortable with taking this short from up here is also because you want to have, and I'll get rid of the pink, right? It's because you want to have at least a good risk reward, right? Like realistically, you could take a trade from down here as well, but then if you take a trade from down here, obviously you have a much bigger stop loss and a much shorter room to take profit, right? So I want there to be at least a level of a retracement back up, um, to at least be able to have some room to make some profit, right? I don't want it to just be like, you know, I don't want the risk reward to look like this, right? If you're taking it to the final target, right? You don't need a stop loss that big if it doesn't warrant it, right? So this is what I'm looking for, right? Both on the 3 minute and the 4 minute, they're both legit setups and opportunities, right? Because you had your liquidity grab here, price pushed up, it aggressively pushed down, it gave you a breakup structure lower. We are also with order flow, we're bearish, right? It's just showing signs of bearishness, and so we're confident in the setup. And the strategy that I do now is like I only go for a 1 to 1.5 risk reward just because I want to eliminate greed. I'm just gonna take it full target, and whatever I walk away with is whatever I walk away with, right? So it makes it easier, so I don't have to worry necessarily about taking partials and all that. I'm just going to settle with this and allow time and compounding to do the heavy lifting, right? So this is the setup that I'm effectively looking at. So if we begin fast forwarding it, right? So me personally, what would have invalidated the setup is if price came down and cleared this low right here, because this aggressive push down, it obviously blasted through structure right here for a break of structure lower. Um, and I didn't really want this low to get taken because this low is very close to this low, and this low down here is the low of the day and it's also the final target. So if price went down and cleared this level here, then in my opinion, I would have just invalidated the trade. But right now I have the limit order set and I'm just waiting for price to deliver. So boom, right here, right at 10:04 a.m. That's when I was officially tripped into the position right with my limit order. Of course, I have my stop loss above the high, and my take profit is just going to be this level here for a 1 to 1.5 risk reward. And so now, um, as we're in the trade, right, we just let it play out. So this was an interesting trade. Of course, I have my stop loss above that high for a reason because I'm not expecting price to go above this high. Now, I understand some people are probably thinking, well, you know, price may stop you out because, you have your consequent encroachment up here and price never came up to it. That is true. But at the same time, price met all of my confirmations and it delivered everything that I'm looking for. And so that is the reason why I entered this trade right here. So as you can see, price did go really close to my stop loss, and I'm surprised. Well, technically, it makes sense why I didn't get stopped out. But of course, when you're in a sell position, price doesn't have to actually touch your stop loss. Price can get really close and you might get stopped out because of spread, right? When you enter a sell position, there's spread. So essentially it can be like a couple pipettes where, um, yeah, basically it can be a couple pipettes away from your stop loss and you still get taken out. So of course price went really close, and so I thought I was going to be tripped out of my position and stopped out, but thankfully it didn't happen, right? If I jump down to 3 minute, right, as you can see, price kept pushing higher, 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 and then when it got super close, boom, that's when you started seeing aggressive candle. And then yeah, price absolutely blasted through these lows down here, which at that point, once price goes under, closes under, you would want to roll your stop loss, but clearly, right, price just blasted through and took me out. So from when I entered the trade, I entered the trade here at 10:06, and then by 10:21, I was out of the trade. So this was pretty much a 15-minute trade that happened on Friday. So it was really quick. I just entered, and then pretty much like price hit my take profit. So when it comes to trading, you want to make sure your stop loss is in a safe, logical spot, which in this case, I believe it to be the case because price came up, already snagged liquidity. Price is bearish, and so price came up and triggered buy side liquidity, purge buy side liquidity, and then broke structure lower. So it's very little reason for price to want to go above this high, right? Because they already cleared liquidity and it broke structure lower, right? So that's why my stop loss was above the highs. You can see price came up, respected it. It didn't tap my stop loss, even though it came close, it didn't. And then price absolutely tanked and hit final target. So that's set up. So now I want to show you guys further proof that, you know, the markets are correlated between the S&P and the Nas, but of course, the position that I'm in now and from what I've seen and what I've learned, like it's just obvious that it's all manipulated, it's all rigged, it is all controlled because it's just that's how this game is, right? So we look at sorry, we look at the Nas. So I have it here side by side, right? The Nas and the S&P, right? So the reason why I took a trade on the S&P and not on the Nas is because as you can see here with the Nas, right after 9:30, the same thing happened. Price came up and pushed, right? Made this push here, which is the same push that we're looking at right here, and then price went lower. So for the Nas, price came down lower, and of course, eventually blasted through this low here. But the problem with Nas is if you look at this fair value gap right here that was left, right? If I make it gray, this fair value gap that was left here, you can see price came up and tapped into it before the structure was broken, right? So structure was broken with this bearish candle here, but prior to the bearish candle, this candle formed and this candle tapped into fair value gap. So whenever I take a trade um, into fair value gap, I want the fair value gap to be left open. I don't want it to be already tapped into, which price already tapped into. So that's for me, that was already a no-no for Nas. Um, and what else? And also, if I go on the 4 minute time frame, right, as you can see, look how tiny this gap is. This is a super tiny gap. Like when you're trading for value gaps, you want it to be an obvious gap. You want it to be a gap where like you can't really miss it, right? And this gap was super tiny, so I'm not going to trade such a tiny gap because price, the bigger the gap is, the higher the likelihood is of price to actually respect it, right? So you're seeing that this gap, right, is getting traded into prior to like the break of structure and everything. So it's just not really a desirable um like trade on the Nas. So now the other thing that I want to show you guys is here on the Nas. So after 9:30 open, price came up and pushed up, right? We all see it clear as day. Now if I drop down to the 1 minute time frame, and I might have to just sorry about this because I have the replay tool already on the S&P, right? But on the 1 minute time frame on the Nas, you guys can see here, right? 9:30 open, price came up, clear liquidity, and then broke structure. And what happens after structure got broken, right? Because clear as day, structure got broken right here. This is the last swing low prior to his move down. What happened here? Price left the gap. So I've seen some traders that did recaps on this day, and they tried to take a sell right here because they seen a break of structure in 1 minute. And while it is technically true that structure was broken, right? If you guys remember on the 5 minute time frame, there was no like bearish candle, there was no bearish like aggressive momentum or any of that, right? Like here, this is the 9:30 candle right here. As a matter of fact, the 9:30 candle closed bullish. So my previous trading, I didn't incorporate using the 5 minute time frame. And so my previous strategy with trading, I mean, obviously it was very similar, but I guess you can say like before the strategy was fully developed, right? I was not factoring in the 5 minute candles. And so I would see that on the 1 minute candle, the liquidity gap and break a structure, and I would jump in for a sell. And then that would have resulted in a loss. But clearly, as you see here, there's no bearish candle. So that's why this strategy also not only does it give you like the highest probability to win because you're trading in alignment with the market, it also has essentially safety measures or safety protocols, I guess, in place to prevent you from taking unnecessary losses. So that is why the previous version of the strategy I would have taken a loss there, but with this version I didn't, right? And the same with those fair value gaps that formed. Those fair value gaps were too tiny, and the S&P was a much desirable trade setup. Now, here's the other variable that I want to show you guys. So, of course, you guys remember here that price went up, and then began rejecting, right? So, this is why it happened because I had also marked consequent encroachment for the NAS 100, right? Because I essentially charted out both and I trade whichever one is delivering the better setup. So, price came up and blasted through this high. So if anyone ever took a sell right here, obviously it would have resulted in a loss, and price kept going up and up and up. So of course price is correlated between both pairs. So that's why you've seen price start push up past this fair value gap. Now price came into the consequent encroachment right here for NAS, and as you can see, you're starting to see a lot of these candles look almost identical, right? So this bearish candle, I mean this bullish candle here looks like this bullish candle. This candle right here that looks almost like a doji is this candle right here. And you're seeing price go up, but price, what happened when price got to the 50% of the wick, right? This wick right here, the same long wick that we see on the S&P, price rejected it, right? At 1018, right? You see this bearish candle here at 1018. This is the same aggressive, oh, this is the same aggressive bearish candle that appeared at 1018. And then this next aggressive candle here at 1021 for the NAS 100 is the same aggressive candle that formed at 1021 for the NAS 100, for the S&P, right? So this is what I mean when I talk about correlation, right? The same bearishness, right, that we saw on the S&P, right? If I put on the 5-minute time frame on the NAS, right, you're seeing it right here, right? You're seeing that same fair value gap get respected. You're seeing the same break of structure, right? Right here, same break of structure lower, right? You're seeing, right, on the NAS, you're seeing it again, another fair value gap get respected. You're seeing this large wick right here, right, that had the consequent encroachment, right? You're seeing these highs get cleared, right? So you're seeing signs of bearish order flow. So of course, because of that, I'm looking for a sell. But in order for me to take a sell, I need to see price. I need to see buy side liquidity get taken. I need to see price push up first before breaking down lower. So this is what I mean, guys. It's like at first, price seems entirely random. Price seems like a mystery. Price seems like it's just doing whatever it wants, and like there's no way to have an idea as far as what price might do next. But like when I show you this, how can you not begin to believe it, right? Because these are a lot of the same concepts that are constantly repeating over and over and over, right? Price came up on the NAS 100 to the 50% mark of the wick, and it just rejected it as if it was resistance, right? Most traders, when they first enter the market or like they start learning, they learn support and resistance, right? This looks like resistance, right? Consequent encroachment basically gets treated as no different than support and resistance or like a fair value gap, right? So that's why price came up here and then rejected. Now most people would just say, oh, well, that's random. Well, there's nothing random about that, right? Because why would price conveniently just stop near the 50% mark of the wick where I marked up before this all happened? Price goes up and essentially respects it and just tanks. Like it starts price going up aggressively and then begins slowing down and then absolutely just tanks to the ground. Like that won't happen if it's bulls and bears fighting, right? If the market is just entirely random and it's unpredictable. Like there's certain phenomena in this market that repeats. The same way you're a creature of habit and behavior is the same way the market is as well, right? And so I show you guys this so that you guys can begin seeing this for yourself and start saying like, oh, well, mm, these things don't appear to be random, right? So that was pretty much the trade setup here. This is to show you guys why I took a trade on the S&P because, right, it had a legitimate gap. The gap was still open. It was, a good size, and Nas didn't deliver an open available gap. So like there wasn't anything for me to trade on the Nas. So the only option for me to trade was the S&P. And P. And of course, as I seen price pushing up against me, is when I seen price pushing up aggressively in the Nas. And so I anticipate, okay, maybe price might respect the consequent encroachment and then reject on the Nas. And then once I seen the rejection happening on the Nas is when I started seeing the rejection happening on the S&P, which ultimately led me to, reach my take profit and ultimately walk away with the win for the day. So that was the win on a Friday. Um, and hopefully this is beginning to make sense with you guys. Hopefully the strategy, there's logic to it. And you guys hopefully can also see my growth as a trader because the most important part when it comes to trading is having a sense of directional bias because that is the direction that price is going, that is the direction of order flow is going, and you want to trade in alignment with order flow. So once you begin getting a feel for and understanding this, that's when trading becomes a heck of a lot more enjoyable, and it becomes much more of a smooth sailing journey, because then when you win trades, it'll make sense. And if there's instances where you lose trades, there's going to be more logic to it, because there's times where you might lose a trade because you were offside, you were on the wrong side of order flow. And if you're not aware of order flow, it may just seem like a random loss to you. But because I've been, you know, better understanding order flow, I'm taking more higher probability setups, and I find myself more often on the right side of the market and winning more often. And if I'm winning more often, then of course that means my account balance is going to go up. But that's because I have a much better understanding of the story of price, right? And I'm not using any indicators. I'm not using any of that. I'm literally just using rays and rectangles, right? Literally the rays for liquidity and the rectangles to mark up fair value gaps, right? I'm not using any indicators because you don't need it, right? Price action tells you everything you need to know about price, and this is the story of price. So I rest up the video. If you enjoyed the video, do leave a like and subscribe, as I will continue posting more trade recaps. Hopefully you found this video to be helpful and insightful, because I wanted to give you guys a lot of value with this one, and to explain to you guys why I took this trade and why this trade worked out, right? Because price was bearish, order flow was bearish, price is showing signs of respecting everything bearish. And so that's why I approached the market looking to take sells, and that's what happened with price. Price gave me all the signs and all the cues and everything to go in for a short. I entered this day only looking for shorts, and price gave me all the signs to take a short, and I took the short, and it worked out, right? And at least with the S&P, price came down and cleared both targets, or all the targets, right? So if you had your take profit all the way down to the low of the day, that would have also worked out for you. So another great win in the books, and we're just gonna keep going from here. So once again, guys, this is Joel, and I'm out. I'll see you guys for the next video.